Hey guys, welcome back to another episode of The Trading Edge. If you guys are brand new to the YouTube channel, this is a weekly video that I provide giving you my weekly or weekend outlook on the market. So letting you know what trading opportunities are on my radar for the week ahead. I also typically like to give a very good kind of trading related message, meaning something that isn't necessarily technically related, but stuff that you need to know if you want to progress as a trader. Now, this week we're gonna hop right into the charts because, well, we just spent the last 5 days at the Bridging the Gap workshop giving you messages. So I'm all messaged out, but if you didn't have a chance to watch the workshop or you just want to review it, all of the recordings except for the Q&A are going to be here on the YouTube channel. I'll also put a link in the description box below where you can watch the full recordings on our website as well, including some of the missing videos that aren't here on YouTube. One of those missing videos is going to be that Q&A. And this week's topic is really going to follow up what we talked about in the Q&A, right? So we had a few things in the workshop. Like one, Darren, who was the creator of the Cipher pattern, came in and talked about how he found it, the pattern, meaning kind of the thought process and how it developed and how it went from an observation to an idea, how we applied rules to it, how we went and tested it, and how it eventually became what it is today, which is one of the most frequent patterns that we see in the market. And in our Q&A session, we talked about how, it's not just a random thing that's on the chart, right? The Cipher pattern was around well before Darren founded it, but how a lot of the buildup in the Cipher pattern and really in harmonic patterns and advanced patterns in general come from the buying and selling action that happened in the market, specifically with institutional trading. And if you've been paying attention to the markets lately, we've seen a lot of news-related movement in the markets to end the week, and there are a lot of advanced pattern formations setting up because of that. So we're going to take a look at a few examples today. We're also, I guess while we're here, just a heads up, that news is going to continue as well as we have a big news week ahead of us for this upcoming Wednesday and whatnot as well. So let's dig into the charts. Let's see what we have to look at. And yeah, let's get into things. We're going to start here on the dollar yen, and apologies in advance, my neighbor's cutting the lawn, so you may hear a little bit of humming in the background. But this is a perfect example of the directional movement that we've seen in the market, specifically on many of the dollar pairs that we saw to end the week, and a lot of it is going to be news related. Now, what I'm looking at here on the dollar yen isn't a continuation to the downside. I know a lot of newer traders will see this. They'll see the big red candles. They'll say, oh, there's so much bearish momentum. How can I get involved in the rest of the move? I like to think like a contrarian. So instead of thinking, how can I get involved in the rest of the move? I'm thinking, where could this move potentially end? And I think we've come to that point. If we look at what price has done in the past, and this is where the clues of reading price action are going to come in handy, right? We've consolidated at this current level in the past. We've even put in a head and shoulders pattern. And if we look at how the recent candlesticks have printed, right? This goes back to the technical sessions in the workshop where we talked about not just knowing the candlestick name like a spelling test, but actually being able to read it and understand the story within the story in comparison or in comparing the wicks to the body ratios and locations of closes and all that fun stuff. We can see that this level right here has been pretty significant. Not just the fact that we had this massive engulfing candle come up here and then see a little bit of rejection or retracement, but as we came back to that level, we saw the same thing in the opposite direction. We saw the bears push down and then the bulls push it back up. And if we just drag this box out to the left, we're going to see other examples of when reactions have occurred as well. So I would expect a reaction to come in this area as well. Now, again, we want to be predictive in our analysis, reactive in our execution. So I'm not just saying that and putting an aggressive buy limit order right there. You can do that if you want, but this is where we need to build our case for entry and ultimately look for our entry reason to get involved. So we can make a few cases right here. We have price action in that level as far as thinking like the other trader, right? If I was a seller, this is where I would be looking to take some profit at it. It's a pretty significant level of structure in my opinion. We also have the RSI massively oversold down at 11, right? My RSI defaults or I think the default is 30. I usually have my oversold at 20. So I look for really oversold conditions. We're even past that at 11, which is going to put us in a very oversold position. It also looks like we have some Fibonacci confluence. Just eyeballing this, I would say a 618, maybe a 50%. Looks like a 618. Fibonacci retracement, swing low to swing high. Yeah, right near a 618 retracement as well. So we're building that CTS score, that way to quantify our trading opportunity. What you do at this point, is you then refer to your trading plan. Do I need to drop down to a lower time frame, or can I drop down to a lower time frame and look for my reason for entry, or do I need a specific candlestick combo or simple pattern formation on this time frame to get my reason for entry? Stops should be below the box we just drew out, in my opinion. Right here is going to give you a safe level of stop. And I think as far as target placement goes, a very conservative approach would be to look for a retest of these highs right here. I think we can go even a little bit higher up to this level of structure as well. I'm just curious if I bring in another Fibonacci retracement. I'm doing this live. I don't rehearse this analysis, guys. So whatever you see is kind of my thoughts for the first time. If we were to retrace at this level, let's see if there's any Fibonacci confluence at that zone as well. Look at that. Ooh, a 618 right at that top zone, 382 and 50% that lower zone. So I think those are going to be pretty good levels to look for price action to go. Next, as again, this is all review of the workshop. Measure out your stops, measure out your targets, see if that risk reward works. If entries, stops, and targets all check the box, boom, you're good to go. Next, we're going to go to Dollar Canada, the Loonie. And again, Loonie's been in a little bit of consolidation. This was a good trading opportunity from a few weeks ago, and now to the naked eye, it kind of looks like, hey, nothing is happening. I believe we looked at this in last week's video. We talked about potential butterflies and whatnot and head and shoulders pattern, but the market has yet to give us the movement that we need. However, if we zoom in, if your eyes are trained, you can see something very sneaky that is setting up as well, and it's going to be a potential cipher pattern. If we look at this last swing high to swing low right here, this is going to be our X to A leg. This small retracement up here is going to be our A to B. We then extend down and it looks like, oh, we hit the 127. This is going to be our B to C. And if we were to move back up to this level, that's going to give us a 786 Fibonacci retracement from the entirety of the move. That's going to give us the CD completion of our potential cipher pattern right at a previous level of structure. So again, you're seeing a lot of these markets with either consolidation or the recent extensions due to news set up these potential cipher patterns. Here's one on the Dollar Canada. Of course, if you want to be more in the know about the rules, check out and mess up the day here. Day 3, session 1, I think it was, where Darren Oglesby is the one that developed and founded the cipher pattern. He breaks down the rules step by step. That way you have them straight from the developer's mouth and not the random places that you see on the internet. Because trust me, I've seen a lot of those random places and a lot of them have the rules the wrong way. So make sure you know it the right way if you're going to trade it. Speaking of patterns, another pattern formation setting up. Again, we're seeing a lot of these across the board. It's going to be here on the Aussie dollar. 2 legs you can take this from. Neither are going to be wrong. I'll measure out this smaller one, but swing high to swing low, X to A to B, B to C, and if we push up, you're going to have a CD completion right up here at 74.89. If you're going to choose this larger leg, same setup, just going to make the risk reward a little bit different. So you can see the same X to A, swing high to swing low, A to B right here. We still come past that 618 Fibonacci retracement, so it doesn't shift it from a Gartley to a bat. B to C, and then C to D is going to be the exact same location. Again, the only difference is going to be the stop loss, because the stop loss is going to be based off of where your X leg is at, whether it's here or here. Now, you'll see a lot of traders have this scenario and maybe they'll measure both out and they'll default to the smaller one because it gives them the better stop loss. Although that's probably the natural instinct to do. I would encourage you to take the longer term approach and just practice training your eyes on IDing impulse and anchor legs, right? I think that's going to be very important to you, because doing it this way, right, by taking the smaller leg automatically, just because it's a smaller stop loss, what you're doing is you're basically feeding into your emotion. So you're taking the trade that fits, you know, what emotionally makes you feel the best, and bigger picture in trading, that's going to be a very bad idea. That can lead to a lot of other mistakes like early target taking, moving stops back, all of that fun stuff. So you want to have as consistent as an approach as possible, and understand that, hey, although your, you know, pattern trading is looked at to be easy because you're just kind of, you know, does my X to A hit this, or does my A to B hit that, does my B to C hit that, checking the boxes. It does take skill. You have to train your eyes on how to read a price chart, how to understand and really decipher the ebbs and flows of a price chart. And if you can't do that, you're not going to be consistent in what type of patterns you identify, and then there's going to be inconsistencies in your trading. So Don't take the shortcut and just take the one that feels best. Really think about training your eyes so that you're seeing these pattern formations as consistently as possible. And if you need a little help, that's when you just use the pattern recognition tool. Use that Enigma tool that we showed you during the workshop, and that will give you the different options and really help with kind of training your eyes on what to see. All right, following up on our theme of Cipher patterns, yes, we have yet another one. This time I'm on Pound Canada 4-hour chart. Should look familiar to Dollar Canada, X to A to B, B to C, CD completion right here, potential bearish Cipher. We don't really need to go into any more than this, other than the fact that this one's going to come at a really nice structure shelf as well. All right, next up, we're gonna pop over to the dollar Swiss here on the 4-hour. This is another pair that you can see had a massive drop off, some dollar weakness ending the week. And similar to dollar yen, which we looked at first, the question is, where is this move gonna end? Is this move gonna end? Where are we likely to see a little bit of relief? And again, look at structure, right? Just look at, horizontal line is one of my favorite tools in the market, because what you can do is you can draw it on at a level and then basically look left. And something that my trading mentor ingrained in my head was look left, structure leaves clues. And that's probably the most powerful statement I've ever learned. But you can really get a good visual of what levels the market has paid attention to. And understand, when I say levels, it's not a exact price point, right? They are zones, and we want to identify those zones, and we don't have to be perfect on the price point. You can see prices coming to a previous level of consolidation, right? We touched this level here. We consolidated on this line in the past. Yeah, we broke through. That's going to happen. These things aren't perfect. But you can see we consolidated once again right over here. We even consolidated right here. I'll bring out my Fibonacci retracement tool again for a little bit of confluence, and we should see, do we have anything here? We have a 3D2 right at market. 50% is going to be a little bit lower, so that's not going to mean as much here. But another clue, right, as we go down to a lower time frame, is look at how price has moved previously, right? We know this level of structure here, and this is pretty interesting. This was a rising wedge that we thought would get some relief and retrace to the downside. This was a failed rising wedge. We're coming down to this level again, and what are we doing? We're doing the same loss of momentum pattern. We can see the RSI again massively oversold. I don't even know what it's at down here, like 3. It's starting to round out as well. So we're starting the beginning stages, or I guess technically we are seeing a little bit of divergence here as well. So we're getting clues that not only is price in a location where we can look for a potential reversal, but we're getting clues of a slowdown in the market so that that potential reversal may be happening. Now, something that's important to remember is, so funny story, I recorded the last half of this video and without noticing I ran out of recording space because I used it all up recording the workshop and whatnot. So I'm gonna come back and kind of patch the holes here. I'm gonna go a little bit quicker than normal because I don't feel like recording the whole thing over again. But I think what I left off saying here on the dollar Swiss is it's important to understand that this movement also comes at the end of a week, right? The second half of a New York session on a Friday where London is closed. So just like we talked about before, it's not smart in my opinion. It's never smart in my opinion just to put an order there. It's you want to wait for the market to give you clues, and watch this pair on the open, especially watch this pair after London gets a hold of it on Monday, and look for clues that were more likely to reverse than not. If we do get that reversal, I think a good area to look for targets at is going to be up here at 92. You should be able to get a really decent risk reward if you're taking advantage of this opportunity. Now let's look at a few more, and again, I'm going to be a little bit lazy here just because I went through them already, and I really don't feel like doing it again. I always get a little bit depressed when the recording kind of fails on you. You put all that work in. But gold here, potential Cipher pattern on gold. Gold had a rough week, but we're rebounding from that a little bit. This one's way out, but just want to give you an example of these pattern formations and how they occur in different markets as well. So X to A to B, B to C, C to D up here at our 786 on gold. And then the Nikkei here on the daily, probably the 4-hour as well, has a potential bearish Gartley setting up too. So a lot of opportunities in the markets, a lot of pattern formations this week as well. Hopefully this puts a few on your radar if you're someone that's just trying to learn or take advantage of them. So hope you guys enjoy your weekend. It's a great start to my weekend. It is the Premier League is back. Everton ended up getting a victory, after looking like we were going to do Everton type things with Michael Keane just giving the ball away, basically right in his own 18. But we rebounded from that and got the W, so I'm happy about that. And again, I'm still pumped from the workshop. A lot of you guys are giving me a lot of feedback on social media, which is amazing. This was one of our best workshops yet. Not just the content that was delivered, but we really had a great audience. This is the first workshop I can remember we didn't have to kick someone out for being an asshole, as Jason would say. So make sure you watch those recordings. They're going to be up until the 22nd. They're here on the YouTube channel. I would recommend watching on the Tier 1 platform as well. That way you get the pieces that I didn't put up on the YouTube channel as well. I'll put a link in the description box below.